Ladies and gentlemen, welcome back to another video. I'm your host, TheDividendAristocrat, and today we're going to be talking about all of my dividend income for the month of March. If you guys do enjoy these types of videos, make sure to subscribe to the channel, and as always, we'll begin by taking a look at my portfolio dashboard. As a reminder, this is not financial advice, and I'm just merely sharing my opinions on this channel. So as you can see right here, my total invested right now for my portfolio is sitting at right around $28,500. I have not invested much in the last couple of months since I went so heavy in January, but I do look forward to investing more in the coming months. Currently, my portfolio value is sitting at $37,303, which is a pretty big gain. That's an $8,855 gain, or a 31.13% total return for my portfolio. This does actually mark a record high for my portfolio. I've never had it sitting so high, and my total return is also sitting at a record high at 31%. So we'll see. If the market continues to go up, I will definitely be seeing some nice price appreciation, but if it does have a correction, then I could be seeing a much lower portfolio value in the coming months. In total, I have earned right under $900 for my portfolio, so I'm really close, inching towards it every single day, and in the next dividend, I should actually be hitting that milestone, which will be amazing, and it makes me one step closer to my main goal of $1,000 of total dividends earned over time. My yearly projected income sits at $682, which is pretty good. I also want to make that reach $1,000 hopefully by the end of this year, but if not, I'll definitely have it by the end of next year, which will be amazing. The portfolio yield sits at a pretty low 1.83%. It's how I prefer it. I've told you guys before in previous videos, I don't like my portfolio yield being so high. I'd rather have a bigger dividend growth rate than a bigger dividend in general. With this yield sitting at 1.8%, I can get the best of both worlds in my opinion. I can still get that total return, which is what I'm aiming for, but I also get to enjoy that dividend income even though it is at lower percentages. My yield on cost for the entire portfolio sits at right around 2.4%, and there's two reasons for that. The main reason is because when I bought these companies, I bought them at a much lower valuation. So when the price appreciated, of course, my yield on cost was still based on the initial cost I paid for the stocks, even though the current yield is now lower. The second reason is because a lot of the companies that I do hold have grown their dividends in the past year to 2 years, and so because of that, my yield on cost is actually higher. Right now, I'm sitting at a cash position of about $2,400, which is fine, and my total holdings are at 24. Now, one of my goals this year is actually to cut down my total holdings. 24 is a little bit higher than what I would like, and a lot of these companies I bought as turnaround plays, and some of them have actually had a nice price appreciation since, and so a lot of these lower quality companies I'd rather reallocate into higher quality investments. So taking a look at this table, we can see how much I've invested each year since 2020, and the same can be seen for the dividends I've received each year. So in 2020, I invested $2,800 total, and we can see how quickly that's increased over the past couple of years, with 2023 sitting at right under $10,000 invested. Now, so far this year, I have invested $2,500, and my goal is $12,000 by the end of the year, so I'm doing pretty well on that for now. In terms of dividend received, we can really see how quickly it's been growing, and this graph also shows the same exact thing. So $12.45 in 2020, and now this year we're already seeing at $167. So we're at a good pace to break last year's record, and I'm very confident we'll be doing that unless there's any big cuts coming our way. Looking at the monthly dividend history graph, we can see it has been growing nicely over time. We'll take a more in-depth look at that in a bit once we go into my monthly breakdown tab. Aside from that, my largest paying position right now for dividends is VOO, and that's just because it is my largest holding in my portfolio. The yield is actually not that high compared to a lot of my other holdings. Following that, I do have schd, and then Altria Group, Texas Instruments, and United Health as some of my other notable big paying dividend stocks. Regarding my portfolio allocation, we can see that VOO is my largest holding, making up 36.3% of my entire portfolio, and then following that is schd sitting at right around 13.2%. For the individual companies that I hold, I do aim to keep them under 5%, and we can see that some of them are a little bit higher than that, like Texas Instruments, but over time it will balance out, and I'm pretty sure they'll be sitting right around 5 or 6% of my total portfolio. For now, my sector weighting is also very heavily dependent on ETFs, but if we did break down the ETF category, it would actually be distributed a little bit differently, but it's still done pretty well, and healthcare is one of my smaller sectors at only 5.3% because the only holding that I hold in that sector is actually United Health. So now, of course, the most important part of this video, how much did I receive in dividends for each of my holdings? So you can see right here, this is my monthly breakdown for my brokerage account with Vanguard, and it shows each dividend I received this month. Now, I figured it might be helpful to break down each individual holding, so we'll start off with Visa, ticker symbol V, and you can see here that I got a dividend of $1.05, and I reinvested that to get 0.004 shares back. My Visa dividend is actually one of my smaller dividends that I receive on a continuous basis, and that's because I only hold 2 shares of Visa, and the dividend yield is actually pretty low for this company. If the price does drop significantly, I will definitely be picking up more shares, but at these prices, I can't justify it. We can see that in terms of dividend growth, this company is a machine. The yield is pretty low at 0.75%. The payout ratio is very healthy at 21%, but that 5-year growth rate is amazing at 16%. There aren't many companies within the S&P 500 that can boast such consistent and aggressive dividend growth. Their dividend growth history is at 15 years, and in 10 years, they'll be a dividend aristocrat, which I'm sure they will accomplish. My next dividend this month was from Intel Corporation, ticker symbol INTC. I got an amount of 38 cents, which was reinvested to buy back 0.009 shares of Intel. Now, the funny thing about Intel is they actually cut their dividend pretty significantly right after I bought some shares of the company. I only own 3 shares, so it's a very small percentage of my portfolio. But unfortunately, with that dividend cut, the dividend is much lower than it used to be, sitting at 1.13% dividend yield. Now, thankfully, what that has helped with is their payout ratio. It's now at a healthier 71%, though I would, of course, like it to be much lower over time, but they have been investing a lot back into the company in terms of capex and building their facilities. The 5-year growth rate is negative, which is to be expected, and their dividend growth history is 0 years, so hopefully they'll start building that back up over the coming years. My next dividend was from Ford, and I actually not only received 1 dividend from Ford, but I received 2. So there was a regular dividend, which I got for $1.17 from my, I believe, 7 shares of Ford. So that amounted to 0.094 shares of Ford reinvested. And then I also got a special dividend from Ford for $1.40, which was reinvested to buy back 0.112 shares. Now, the reason for this special dividend is that Ford does aim to pay shareholders back about 40 to 50% of their adjusted free cash flow, and that comes directly from the company themselves. So this year, in order to match it, they supplemented a dividend of 18 cents, their regular quarterly distribution of 15 cents per share. Now, looking at their dividend summary, we can see that their yield sits pretty high at 4.52%, but their 5-year growth rate and dividend growth is very inconsistent because, like I said, their dividend fluctuates depending on how much money they have left at the end of the year. This is one company that I have been considering chopping out of my portfolio, and I think I'll do so pretty soon. Just depends when I get around to it. My next dividend distribution this month was from Target, ticker symbol TGT. They paid me an amount of $6.72, and I reinvested that to get back 0.04 shares from this company. Now, Target has a slightly higher dividend yield than most of my other stocks at 2.48%, and their payout ratio sits under 50%, which is not bad at all. Their 5-year growth rate is really high, but don't let that mislead you because the last couple of increases have actually been pretty low. The more aggressive hikes came during COVID when they had a lot of demand for the products in their store. Now, one thing that might surprise a lot of you that not many people realize is that Target is a dividend king, so they have 55 years of dividend growth history, which is really solid. The next company that paid me a dividend is actually one that's also on the chopping block. It's 3M. I only own 1 share of this company, and I do think that I might be selling it pretty soon. They paid me $1.62, and that reinvested into 0.016 shares of the company. At the time I bought it, I thought I got in a very good valuation on the company, but since it has tanked a decent amount. Their current dividend yield is sitting pretty high at 5.69%, but in the past year we have seen it as high as 6%. Their pay ratio is sitting at 65%, which is inching higher and higher, which I'm not super comfortable with, and their 5-year growth rate is extremely low at 1.72%. Right now, the company is struggling with a couple of big legal battles that they're having to fight, and we'll see how that plays out for their dividend in the coming years. They are a dividend king with 65 years of consecutive dividend growth history, which is good, but like I said, with that 5-year dividend growth rate of 1.72%, that's pretty weak for what I'm looking for. Following that, I did get a dividend from S&P Global on March 12th, and this is one of my favorite companies in my portfolio. They paid me $4.57, which I reinvested to get back 0.011 shares of S&P Global. This company is a dividend growth machine with a 5-year growth rate of 12.54%, and their pay ratio sits comfortably under 30%. The only problem I have with them actually is that their recent dividend hike was only 1.1%, I believe, which is extremely low historically for them. I definitely expected much more from this company, especially with how they have been performing financially, but I guess only time will tell whether they'll start increasing those dividends much more aggressively once again. They recently broke that 50-year dividend growth mark, which makes them a dividend king, and that's definitely awesome to see. The next day, I did receive my dividend from Northrop Grumman Corporation, which is a company within the military industrial complex, and I do own 2 of these kinds of companies, the other one being General Dynamics. The dividend was a small $1.88, which barely amounted to 0.004 shares of this company reinvested, but over time, I do think this will be a good holding for me. Their current yield is at 1.5%, which is a very healthy range in my opinion, and their pay ratio is very low at around 30%. Their 5-year growth rate sits at 9.28%, which is much more competitive than a lot of the other defense companies, which is something I really like about Northrop Grumman Corporation, and they have a dividend growth history of 20 years, meaning that in 5 years, they will be a dividend aristocrat. Next, I did receive my Microsoft dividend at $3.03, and like my other holdings, of course, I reinvested it back into the company. Their dividend yield sits at 0.71%, their payout ratio is at 25%, which is extremely healthy, and their 5-year growth rate is at 10.2%, and they had a very nice dividend bump this year as well. They've been increasing their dividend payments every year for the past 19 years, and in 6 years, they'll be looking at dividend aristocrat status if they make it that far. And my newest addition to my portfolio, United Health, paid me $7.52 on the 19th of this month. Reinvesting that only gave me back 0.015 shares of the company, but I think over time this will become a very good holding of mine. Now, they have had their fair share of controversy recently, but if they keep performing this well, their dividend does definitely speak for itself. Sitting at around 1.5%, I think it's a very healthy range to be at with a pay ratio under 30%, which like I said is always something I like to see. Their growth rate is one of the higher ones in my portfolio at 15.87% in the past 5 years, and their dividend growth history is at 14 years. On the 21st, I received my Home Depot dividend in the amount of $4.60, and their dividend yield currently sits at 2.35%. Their pay ratio is a little higher than I would like at 56%, but still very healthy, and their 5-year growth rate is actually very aggressive. Their most recent dividend hike was actually not double digits, it was actually 7.7%, which is still very competitive and definitely keeps up with inflation. They have been growing their dividend for the past 14 years, and I can't see them cutting it anytime soon. My second largest dividend payer in my portfolio, schd, paid me on the 25th at an amount of $36.93, and that almost reinvested to get half a share of the company. I really do like this ETF, but I am pretty bummed out that they took Broadcom out of their holdings when they did their rebalancing. Their current yield sits at 3.31%. They don't have a pay ratio because, of course, it is an ETF, and that'll be based off of each individual company. And their 5-year growth rate sits at almost 12%, which is very good for any sort of ETF. They've been able to grow their dividend for the past 12 years, which, like I said, of course, is not up to them. It's technically up to the companies within their holdings, but those companies have consistently grown their dividends. And I promise I'm almost done with all my dividend payments this month. We do have VOO, my largest holding in my portfolio, and it actually barely gives me more of a dividend than SCHD, and that's because that yield is significantly lower than SCHD. The dividend that did pay out to me was $43.30 at a quantity of 0.091 shares, which I reinvested back into the company. VOO has just had a tremendous year so far, and since it does track the S&P 500, it has grown about 30% in the past year alone, which is amazing. Their dividend yield sits at 1.33%, which, like I said, is significantly lower than SCHD, but I like it that way, and their 5-year growth rate is also lower at 5%. I definitely wish that growth rate was higher, but with companies like Apple making up the top and Nvidia, they don't grow their dividends almost at all anymore, so that's to be expected. Now, their dividend growth history only sits at 3 years, but what the main goal of a holding like this is to actually just copy the market and to hopefully get a better total return than the rest of your holdings over a long period of time. And my last dividend for the month is Union Pacific Corporation. They paid me $1.32, and that's because I only own one share of this company. This has also been a company that I've been debating whether or not I'm going to sell my position in it, not because I don't like the company itself, but because at one share, I'm not sure it's substantial enough to keep. The dividend yield does sit at 2.11%, pay ratio is at 50%, and their 5-year growth rate is at 10.13%. Their dividend growth history is at 17 years of consecutive dividend growth, but I think they're now in their 8th quarter with no dividend increase mentioned, so they're getting very close to losing that status. So I think now is a good time to jump into the My Pie section of my portfolio, and if you guys are enjoying this video so far, definitely leave a like on the video. It helps me out more than you can imagine. If you haven't subscribed to the channel yet, please do so. I do post videos every single Sunday. So looking here, we can see that my portfolio value is sitting at $37,300 with a cash position of $2,400. That does make the cash about 6% of my entire portfolio, which is something I'm comfortable with, and I would definitely like to grow it a little bit more in the coming months. Now, the main point of this spreadsheet is actually to be able to break down each of my individual sections, which I divide into pies. My key to success section is my ETFs, my defined dividends, of course, are my dividend holdings, and my speculative section is any company that does not either pay a consistent dividend, does not pay a dividend at all, or maybe is a little bit more of a speculative holding where I'm not sure how fast or how aggressively it will fall or rise. This just helps me stay organized and ensures I'm not investing too heavily into one company or another. So clicking the slices button will open up my different pies, and we can see here that VOO and SCHD are the only ETFs that make up my key to success section, which is 50% of my current portfolio value. In Divine Dividend section, I do have the most amount of holdings out of any of my pies. That's because I like to hold dividend paying stocks. Now, the ones highlighted in red like Coca-Cola, Union Pacific, and 3M are the ones I mentioned that are on the chopping block potentially. And in yellow is Lowe's and Home Depot. I'm still debating whether I want to hold both of them or just keep one or the other. I think reducing some holdings will make it easier for myself to manage, as well as will give me more opportunity to dive into other investments in the future. Now, one thing that I would like to mention here is that I did put Target into my speculative section. It's not because the company itself is speculative, because of the reasons I bought the company. As it dipped down towards $100 per share, I was buying up this company, about 6 shares of it in total, and my main goal for this was as a turnaround play. Now, I don't think that every turnaround play is a speculative move. For example, when I bought Apple as it went down to $130 per share, I did not consider that speculative because I trust the company and I believe that they'll continue to increase their earnings over time. However, with Target, they had just recently hit those COVID highs and they were tanking pretty aggressively since their earnings and their revenue had dropped significantly. Because of this, I wasn't sure at what valuation they would settle on, and I wasn't sure if Wall Street would continue beating this company down or let it grow back up. Now, because of those reasons, I do consider this one of my speculative holdings, although I'm not too concerned with the company. I just don't like to put it in with my Divine Dividend section because I believe those companies are a little bit more consistent. Also, my speculative section allows me to invest into companies like Google without investing too heavily into them, so it's only 2.4% of my portfolio, but it's a great company that I definitely want to be invested in at least a little bit. So taking a look at my holdings tab, I actually have filtered them out to show only the companies that paid me a dividend this month, and I've sorted them by highest gain to lowest gain. So unsurprisingly, at number 1 we have Microsoft, but surprisingly we have Intel Corporation as number 2. It was actually sitting way higher than this just a couple weeks ago, but now it's been dropping down a little bit towards $40 per share. Target is my most recent winner. It was negative for a pretty long amount of time, but after the 2 most recent earnings calls, it actually has shot up pretty aggressively. My worst performers are 3M and United Health. I'm not surprised by United Health because I did buy it when it was tanking, and it's actually my most recent holding, only been in my portfolio for a couple of weeks. On the other hand, 3M has been in my portfolio for a very long time, and it just has not been able to climb back up. I bought it at $124 a share, and it's currently sitting at $106 per share, which is pretty low. In case you are wondering about the color coding, I do have conditional formatting on this sheet to show whether the current price is close to my price paid. So as it gets closer, the colors get darker, and as you can see here, both of these are basically the same price, if not lower than what I paid for them. In particular, I do want to point out Northrop Grumman Corporation. It has been a bit of a roller coaster going up and down, so some weeks I'm negative, some weeks I'm positive by a decent amount, and unlike General Dynamics, which I bought around the same time, this company has not been consistently growing for me. Now, if instead we want to take a look at dividend earned, we can see that VOO has paid me the most amount of dividend over its course. Now, of course, it is also my longest holding, and I bought SCHD more recently compared to that. For individual companies, Target has paid me the most at $21, followed by Home Depot, and then Microsoft. Now, out of the companies that paid me a dividend this month, Intel Corporation and Union Pacific are both my lowest payers. Organizing it by total annual payout, we can see that VOO is still my highest payer, but SCHD is quickly closing that gap at $162 per share, and I think it will pass it over time. United Health does follow them, which makes sense since it is one of my biggest holdings in my portfolio, at least individual holdings, sitting at 5.3%. My lowest pairs, once again, are Intel Corporation and Visa. Visa has a very low dividend yield, and Intel Corporation, I only own about $100 worth of the company, so that also makes sense. In terms of yield, 3M is my largest yielder, but actually my biggest loser, which is why chasing yield does not always make sense. My lowest yielders are some of my best performing companies within my portfolio, such as Microsoft, Visa, and S&P Global. In this case, them paying lower dividends means that they have more money to keep within the company and to reinvest back into the company, which in this case has been very good for them. Now lastly, in terms of allocation, my biggest holding is VOO, as we saw before, and then SCHD, followed by S&P Global, and then United Health. At one point, Microsoft was my second biggest individual holding, but it has since dropped because I haven't bought this stock in very many months. Now, if we do take a look right here, we can see that Union Pacific, 3M, and Ford are also my lowest allocated holdings in my portfolio. That is a big reason as to why I have considered selling them, because I don't see the point of holding such small positions in my portfolio anymore, and I'd rather buy holdings that are at least 2% of my portfolio or higher going forward. So next, I thought we could take a look at my monthly breakdown section of my portfolio, and the reason I'm showing you this is because I have made some updates to it recently. So the only update I made was actually very small, but I added a conditional formatting function to highlight which cell is my highest paid month yet. So what we can see is that in March, I did get paid $115.49 in total of dividend income, which is great. Unfortunately, it does put us right behind the highest paying month, which was December at $121 per share. And the main reason for that is that both SCHD and VOO pay a higher dividend on December historically. Now, that is completely dependent on the holdings within that ETF and does not mean the dividend has been cut or reduced. Quite frankly, it's been the opposite. Both of these holdings have actually paid more this month than they have in previous years. Now at $115, we are at a pretty good start for this year, but unfortunately I do think we will have to wait till December to see a new record-breaking month. So taking a look at this graph, what it does show us is that at first I did only hold VOO, so I only got paid quarterly dividends, but then I followed that by buying SCHD, which gave me some more aggressive dividends scattered across a couple different months. Then in 2022, I did start buying individual holdings, so it was very low at first, in January being only 94 cents, but since then it has been increasing very nicely, and I look forward to seeing how this graph continues to shape up over the next coming years. Over time, I do hope to see a very exponential growth pattern to this graph as the snowball does begin to pick up some speed. So in total, we can see here all the dividends that I got paid and my total order for each of those specific dividends. Now for me, this has been the best solution so far in order to organize my spreadsheet, and it is the easiest way for me to do so. Now to finish out these videos, I do like to look at my future value calculator. It helps me get an idea of what my portfolio value could look like at the end of 20, 30, or even 40 years, and the same thing for my dividend income received each year. If you guys like this future value calculator and are interested in how to make your own, definitely check out the tutorial I posted on my channel a couple weeks ago. It's very quick and easy to follow. So getting back to the video, we can see that it has my starting principal here, which it imports from my portfolio dashboard. It shows my annual contribution at $12,000, which is how much I'm expecting to be contributing this year to my portfolio and every year going forward. My annual dividend yield is my current dividend yield of my portfolio. My expected dividend increase, we can lower it a little bit. I think it's been a little bit lower this year, so I'll put it at 7%. Now, in terms of price appreciation, I think if we are reinvesting dividends, we can expect a 9% price appreciation over time. I think that's fair to do. So we can see at the end of 40 years, my portfolio value will be $6.5 million, and I'll be earning $43,000 of dividend income each year. By that point, my total return will be 1,200%, and my total dividend earned by year 40 will be $573,000. If we want to look at some other time frames, we can pop up either the 20-year time frame or of course a 30-year time frame, and you can see the same exact calculations done for that. Also, following this all the way down, we can see the breakdown of every single year if you're interested in going in there manually. Now, of course, some people might complain and say that this isn't high enough dividends for them, what they're looking for, but just remember that my annual dividend yield right now is very low and it's based off of that. At any point in my life, I can always go and redistribute my investments into higher yielding positions, which of course will increase my dividend income substantially, so this doesn't technically matter that much. If you guys have any recommendations or any functions you want to see added to this calculator, definitely let me know in the comments down below. Other than that, if you guys did enjoy today's video, definitely subscribe to the channel. It helps me out a ton, and comment down below what dividend income you received this month. I know it's a pretty big month for a lot of us. I post weekly investing videos on the channel, and if you haven't watched my latest video where I go over my thoughts about Tesla and my personal investment into the company, check it out right here. And if you are interested in seeing me go over 3 stocks that you can buy once and hold forever, check out this video. Thanks again for watching, and I will see you in the next one.